Good morning, good afternoon, everyone, wherever you are in the world. Most of the people that we have right now on the call today are based in Zurich, as well as also New York. We're super excited to have the last analyst call of the year with our entire research team at 21 Shares. We're super pumped. We've got Adrian, our Chief Investment Officer, and strategist. We've got Max, investment strategist, Kareem, research strategist, as well as Darius from the research team as well, and myself at the Global Head of Research. I will be your host today. We're going to be interviewing every single researcher on the call because of the fact that we were able to be excited to launch our market outlook for 2026. It looks phenomenal. This is a physical and an online one. Before we get started, let's get everyone comfortable. How is everyone doing?
Very good.
Good. I'm
Great.
excited.
Fantastic. Last day at the office in 2025. I can't complain.
Crypto is 24/7, so certainly it wouldn't feel like you left the office anyway.
Very true.
Adrian, what's up?
All good on my side. I mean, it's been a wild ride this year, but quite excited for 2026, to be honest.
Yeah, Darius, Kareem.
I mean, as Adrian said, there's a lot to be excited about. There's a lot to unpack, but it feels cool that crypto really might be becoming a little bit more than the cypherpunk movement at this stage. So very, very eager to get into it.
Wonderful. Darius.
On my side, I always love doing those predictions for the next year and then check on them. And I think it's very cool that we can now present it today with our audience. Obviously, I don't want to blow into our own horn, but I think there's some great predictions that we have, and very excited to share.
And
Yes.
please, for the audience, call us out as well. I think I enjoy that the most, if we get called out on our wrong predictions.
Yeah, absolutely. Especially I think for this session today, we're not going to have a repeat of what happened in 2025. We really want to have a forward-looking view of what we are expecting for the foreseeable future in 2026. For the last 7 years, we've been privileged to serve you guys as clients and prospects, people listening to us, reading our research. So every single time of the year, we sit down with the research team, the brand, the design team, and the marketing team to really form the bold ideas as well as the predictions that we may have for the following year. And we're going to start with Bitcoin. Of course, Bitcoin is the number one, 50% of the market share. There is a lot to unpack for 2026. And we're going to start with Adrian. What do you expect for 2026 when it comes to Bitcoin?
I mean, we have to talk about the cycle, obviously. And our first prediction is that the Bitcoin 4-year cycle is broken. So you might have heard this before, but for the first time in crypto's history, the halving didn't actually and won't set the market rhythm anymore. We actually believe we've seen the early innings of that in spring 2024. Remember, we reached an all-time high before the halving, the first time in history. And the reason back then was clearly the launch of crypto ETFs in the US. So basically, what we are saying is that the halving still matters, but it's no longer the engine, because the supply shock of the actual halving in absolute terms becomes just less impactful. So BTC issuance, for instance, is now below 1%. So that's actually lower than gold. So supply shocks matter less and structures matters more. And put things in perspective, ETFs, corporations, sovereign funds, they absorb 5 times more than the annual issuance of Bitcoin in the last 12 months. And it also includes some big names that prove that institutional adoption is kicking off and accelerating globally. The best examples were the sovereign funds from Abu Dhabi or Luxembourg that started allocating into Bitcoin, or even the university endowment from Harvard that increased their Bitcoin allocation to almost $500 million, and now it's their biggest holding in their portfolio. So yeah, I mean, the 4-year halving cycle, I guess it's not completely gone, but it's no longer in charge. It's really all about structural inflows, macro realignment, institutional adoption, and also regulatory clarity that now anchor the market in 2026.
This is a great point, Adrian, and I love that. Historically, for the last 15 years for Bitcoin, we've seen that every time that we had the halving, which is cutting half the issuance of Bitcoins, 2 years later, we had a bear market, right? So right now, we are certainly in a short-term bear market on the back of the October 10th crash. But what do you expect for the bear market to last, at least for the foreseeable future? In the past, you and I said that it could be at least short term, so basically 2.5 months, 3 months. Is your view change recently, or you think that we may have a new regime?
No, I think in the short term, we're still in a bear market, and we discussed that extensively in many of our publications.
Yeah,
Sentiment is at a almost an all-time low. Liquidity retracted quite significantly.
yeah,
Flows are dampened and muted across the board. So in the short term, consolidation could continue. Um, but let's be honest, sentiment can change quite quickly, especially in crypto. Before October 10th, we were all super excited, while now it looks gloomy and dark. But it can pivot again, and we do think there are some catalysts in 2026 that could kick this off. And that comes with more regulatory clarity. It comes with liquidity that is re-entering the market, and generally speaking, just the structural adoption that is happening,
yeah.
which actually leads us to our second prediction, I would say.
Yeah, absolutely. About crypto ETPs, essentially the main vehicle right now for multiple retail institutional investors to do have access to Bitcoin and over crypto assets directly. And I think the US has been the light bulb moment for many regulators around the world to open up markets in the UK, in France, Asia, and others. So tell us, what would be the prediction for 2026, Adrian?
I mean, our prediction is that global crypto ETP AUM will surpass 400 billion, which is quite a significant number. But it's really about that market structure that we just mentioned. And ETPs is really the vehicle how crypto quietly enters portfolios, and it happens one ticker at a time. So this isn't about hype, it's really about the plumbing. And we've seen multiple examples over the last year that really set the groundwork for that. As you just mentioned, Eli, we've seen ETF listings in Asia, in Hong Kong, in Kazakhstan. The FCA lifted the retail ban. But also we had news that crypto allocations into 401ks are allowed. Big asset managers like 11 trillion asset manager Vanguard did a massive 180, allowing crypto allocations, or Bank of America recently announced that, yeah, they're advising between 1 till 4% crypto allocations to their wealth clients. So all of this really sets the flywheel in motion. And in the ETF business, usually we say, yeah, as AUM grows, spreads tighten, volatility in the long run falls, liquidity deepens, and it's attracting even more capital. So overall, I would say a lot going on. But once again, this change won't happen overnight. But when access gets easier, capital usually doesn't rush in, but it slowly compounds. And that's exactly what we're going to see next year. And that's why we believe global crypto ETP global will surpass 400 billion.
Yeah, absolutely. Important to highlight global and not just the US. Absolutely. Thank you so much, Adrian. I think that was super helpful to look at Bitcoin specifically. And as you guys know, the over half of the market cap of crypto is composed of, app platforms like Ethereum and Solana that do host, in our opinion, the most valuable feature and product that we've seen in crypto, at least after Bitcoin, which is stablecoins. how to basically make payments instantly across the globe, like a WhatsApp message with an internet connection. So stablecoins have been the best product market fit after Bitcoin that we've seen so far. And that's our third prediction that our very own Max, investment strategist, is going to talk about now. All right,
Well,
Max. Max, you are the man. I am
no,
the mic to you. Tell us more about stablecoins.
No, I'm really excited about this segment. I mean, I think this could have been actually stablecoins could have been the word of the year this year, and it's the clearest trend of TradFi's engagement with crypto. And as you put it, Ellie, it's really crypto's killer use case. Stablecoins, they're the rails that are pulling traditional finance on chain. And as you can see from the chart, this year, they surpassed 300 billion, growing by tenfold in 5 years. But we still believe we're early. We think circulation could reach around 1 trillion by the end of 2026. And just to take a step back, I think what's driving this is pretty simple. Stablecoins replace legacy rails with efficiency of blockchain infrastructure. So what that means is instant settlement, 24/7 availability, global reach, dramatically lower costs as well at full programmability. So what I like to say is stablecoins give you a dollar that moves at internet speed. And Ellie, I think, if you look at the history of tech, you would note that this is a familiar pattern. Maybe you're a little bit more familiar with these shifts, as some have come before my time, but open protocols always beat closed systems. Emails, they replaced postal monopolies. The HTTP protocol replaced the early internet's walled gardens, and now stablecoins are doing the same to old financial rails. So I would say we're seeing this across the board with institutions continuing to adopt these solutions. So just to name drop a few, Western Union, they're preparing to launch their own stablecoin on Solana, and Revolut is also enabling Solana-based stablecoin transfers. So why is this important? Well, I think if even a small percentage of these flows move on chain, we're talking about tens, eventually hundreds of billions of dollars in volume. And Adrian, you mentioned that this is with ETPs was a passive way for people to start to adopt crypto. And I think stablecoins are another example of this, where people won't even realize or know that they're using crypto. They'll just experience faster, cheaper, always on payments with blockchains quietly running the show. And this should scale adoption massively.
And this is a massive scale that we're talking about right now, $1 trillion in supply, which is a very bold prediction. And of course, we like to be bold. There are some risks that may happen in the near time, in the near future as well. And we've seen that with some potential DDoS attacks recently on SUI as well as over networks. But we truly believe that the resiliency and the maturity of these protocols would be significant. And I think for the audience, Max, I do have a question for you. Of course, none of what we discussed today is financial advice nor legal advice. But from an investment case, because there are platforms like Solana, like Ethereum, like Sui, and the others that do enable these dollar payments on a 24/7 basis, which platforms may benefit from these specific use cases?
Yeah, that's a great question. And it's important to remember these stablecoins, they don't, exist in a vacuum floating across time and space. As you said, they live on blockchains. And to just pinpoint two examples, I would say Ethereum. They host the largest share of stablecoins, I think upwards of $180 billion, which reflects its scale, trust, and also its first mover advantage. But at
Yeah.
the same time, Solana is seeing the fastest real world integrations, particularly in the payments segment, because of its low fees and high throughput. So just to tie this back into why this matters, every stablecoin transaction, it strengthens the economics of these networks. So over time, this drives revenue and eventual value accrual to the tokens as well. So
I think that's a wonderful chart just because a lot of times we say fundamentally crypto still looks strong. And I think that's testament to that, right? Prices are down. at the moment. We had quite significant pullbacks, but stablecoin supply is actually at an all-time high. To Eli's point, yeah, there might be some risks. Maybe we even see some consolidation, but this is the adoption curve in the back end that is taking place.
Yeah, I agree. And I think 2025 has been the year where we've seen a decoupling between fundamentals and the price movements. And certainly for the blue chips networks such as Bitcoin, Ethereum, and Solana, we've seen some very strong fundamentals. And stay tuned for that as well, because our fantastic Kareem is going to launch also a publication about that in the coming week or so. Okay, let's move on to the next use case that we think is incredibly important in crypto outside of Bitcoin, outside of stable coins, which are financial services on the blockchain for payments, for borrowing and lending, for derivative trading. There is specifically this market that we think is significant as well, and certainly has been the top vertical on top of Ethereum back in the day, back in 2020, called DeFi for decentralized finance. So, Max, you're also still holding the mic. Tell us more about decentralized finance and what do you expect for 2026?
Sounds good. Yeah, no, our prediction, as you can see on the screen, is that DeFi will reach 300 billion in total locked value by the end of next year. So it's around a 2x from today. And yeah, just to rewind a little bit, we'd like to think of DeFi as FinTech 2.0, if you will, the real FinTech. Because unlike traditional FinTech firms, which still sit on top of those ancient rails that I just described, DeFi is also built on blockchains and replaces all those intermediaries with code. And you guys should, of course, already know why that matters. But I think to make it more concrete, it's worth highlighting a few examples here. And one example that I would be, truly excited about heading into next year is a protocol called Aave. And it's a great illustration of how DeFi is competing with traditional banking services. So if you're not familiar with Aave, it enables instant global permissionless lending and borrowing. So that means no banks, no paperwork, and less delays. Interest rates are set through an algorithm, markets run 24/7, and the capital is far more efficient. Um, I'm not sure if you knew this, Ellie, as well, but to put it into perspective, Aave holds around 50 billion in net deposits, and that would place it on top or amongst the top 50 US commercial banks. And that really shows that the proof is in the pudding. And Aave will continue to diversify its revenue engine, its offering, and that should position it as a core financial infrastructure. What's one protocol that you might be excited about, Ellie, other than Aave?
I think other than Aave, we've seen the CME on the blockchain called Hyperliquid. And Hyperliquid has been quite exciting. It's a new application with an underlying blockchain that is outside of Bitcoin, Ethereum, and Solana with its own network and infrastructure. And they've seen more volumes than some of the larger centralized derivative platforms, including Coinbase, including Kraken and others as well that have been around for a longer time. And I truly believe that, consumer-facing applications that are aligned with the community from an economics perspective, like Hyperliquid, have not raised any venture capital funds specifically, but raised through the community. It's a community-owned product, and I truly believe that it has been the best product that we've seen so far that has been more consumer-facing than rather than just a general app platform like Google Play or the App Store. And that's quite significant. And I truly believe that Hype, of course, this is not financial advice, but Hyperliquid has a bright future. Although I would say, of course, as a very impartial person, that Hyperliquid has not seen yet its first bear market. So I'm quite excited to see how a consumer-facing product with clear product market fits can play around in a bear market. So I think that's the first cryptocurrency that we could see, in my opinion, that has a very clear product market fit and competing against large centralized players at a very large scale compared to the any others that were more like in baby steps at the time, whether it was Solana or Ethereum. So that's quite an impressive network to check out for sure.
Maybe
And
Uh,
and
let me
real
just
cash flow. That's what I love. I mean, because a lot of times you mentioned that as well, the return to fundamentals. And we hear this a lot from potential investors or just people on the street that it doesn't accrue any value. There's nothing behind, but Hyperliquid is the best example. 100 million monthly in revenue, it's quite significant with 10 plus employees.
And I just wanted to add to Elise and Adrian's point. For me, the coolest thing about Hyperliquid is that it seems like we solved the infrastructure problem we had in crypto, and now we have decentralized applications which can actually like be competitive to the centralized counterparts, but offer all the benefits of blockchain technology, like full control of user funds, transparency, and so forth. And while it's not a prediction within the slides that we're sharing, I believe to see more and more of those apps in the coming year and beyond.
Yeah. And I think this is a good segue to the next prediction. Speaking of moving up to the stack in crypto from, infrastructure to then applications, we've seen more than just trading in crypto, but I truly believe that this is still in the segue of trading, which is prediction markets. And I think prediction markets to me has been also one of the most exciting applications where blockchain technology is invisible, not accessible to anyone, but has been the best use case for example, collecting information on the US elections, spotting ahead of time the results of the US election as well, compared to any other media outlets, and poly markets specifically, and over counterparts have done a phenomenal job at that, at making blockchain invisible. Even my own mother, she has been using poly market specifically to follow the US elections and other world events. And I think if I want to give a tagline to Polymarket has transformed world events into precise predictions based on how people view the world moving into the next stage. So, Kareem, the floor is yours. Kareem is our very own researcher. He's going to talk about where he sees prediction markets going moving forward. This is still in the same realm of, I would say, decentralized finance to some extent because people have to trade. But I truly believe that there are also observers that do not trade and observe and try to understand better the world thanks to prediction markets. So, Kareem, the floor is yours.
Absolutely, Ali. And I think it fits that we're talking about this after stablecoins because it's one of the few use cases that reverses the script or flips the script on its head. Like blockchain-based prediction platforms are actually used to trade on real-world events rather than just being confined to crypto. And I think that this is something that is quite fantastic because, again, for stablecoins, if, as we've just said, stablecoins are being used for real-world usage, and then prediction markets seem to be the second category in that realm. So this is really quite exciting. Um, the just to begin with, for prediction markets, the point that I also wanted to highlight is that it's not a new phenomena. Prediction markets have existed for a really long time, but there's a clear value proposition for why it's being done on chain. It's because of the global accessibility. It's because of the liquidity in the form of stablecoins, which is something that was not available in traditional platforms. All of this allows to create new markets and to actually look at the long tail of events that wouldn't be necessarily covered in the traditional prediction market model that we have seen over the past few years. So this is also because sometimes we have this question about why is this being done on chain or on the blockchain? This one actually has a very clear value proposition for that. So just to be mindful of this. Now, where do we see this going next year? Again, we do think that we're going to reach almost 100 billion in yearly trading volume. And this is going to be driven by, I would say, three structural shifts. One, there's a lot of uncertainty this coming year, as we see from macro. There's really no clear direction sometimes about whether there's going to be interest rate cuts or not. It seems that the market is changing its opinion every 2, 3 days. This was accelerated because of the government shutdown, but also because of the constant changing of factors within the geopolitical sphere. So prediction markets are perfect for that. And we have the World Cup also coming up soon. So that's another really important world event that will cause people to be using this platform just outside, the domains of crypto. The other thing is that the infrastructure is ready. As As we have highlighted in previous publications, blockchain's transactional throughput right now at its peak, it actually outmatches some traditional venues like Nasdaq. This is not one blockchain that is doing this, it's an aggregation. I think that's what's really important. Things like Solana and Ethereum and Base and some of the really high throughput infrastructure networks, they are living up to this capacity. And then most importantly, stablecoins, they're everywhere. Stablecoins are the liquidity for prediction markets. So we are also reaching this chasm. And then last but not least, we're having regulatory clarity. After years of battle, we have the CFTC dropping its cases against the two leading venues,
Yeah.
which is also leading things like, ICE, the parent company of the Intercontinental Exchange of the NYSE, to invest up to $2 billion in Polymarket. And the result of this, you're now seeing Polymarket on Bloomberg, on CNN, it's getting integrated into Google, on Twitter. All of this shows that there's the scare or the fear of integrating with these embryonic innovations that we're not really there anymore, which explains why this is going to accelerate the mainstream adoption scale that this subsector has been struggling with. Um, yeah, and again, I'm gonna conclude the point about this presentation about what I started off with. It's going to be a wedge for mass adoption. This is now gonna turn prediction markets into a financial tool that actually helps with forecasting. Ali mentioned this about the US election. If you don't have anything on stake or like on the line, then you don't really have any reason to be truthfully giving your opinion about something in specific. And I think this is now with the abstraction of all of crypto's complexity, along with this point, it will make a very clear use case for why this will be something that will really surge in adoption and understanding over the next few months.
Couldn't agree more. Thank you for that, Kareem. And for the investors on the audience, looking at getting exposure to prediction markets, what are the best ways for that?
As with any application layer, you're always going to have to remember that these runs on underlying ledgers. So Ethereum, Solana, Base, if it has a token at some point, which it most likely will. So this is always something to be mindful of. But then also the equity tokens of some of these platforms like Polymarket and Calci. We know that Poly is going to launch a token. Calci, it's not clear yet, but we also have things like Coinbase, which are about to launch their own prediction market next week. So in one way or the other, you could be looking at crypto service providers who are going to have this as one of their business lines as a proxy to get access or to get exposure to this innovation.
Thanks, Kareem. This is great. The next prediction is about artificial intelligence and the agentic economy. As you guys may know, AI has become, in my opinion, the new toy in the streets for asset allocators. People are more excited about the use cases and the industrial use of AI, rightfully so, of course, because this is at our fingertips where we could have a data scientist next to ourselves or a head of content to help us write content as well. But when it comes to AI and blockchains, we truly believe that there will be a Venn diagram between these two technologies converging together. And I truly believe that financial services are going to benefit the most around that, alongside stablecoins. But Kareem, tell us more about how you think about the AI and blockchain economy that we like to call the agentic economy moving to 2026.
I think let's start off with just being very clear about what section or what area we're focusing on because crypto and AI is another whole industry that we can have multiple analyst calls getting into. What we're
Yeah.
talking about here specifically are agents, the agentic economy, as Ellie just said. If you guys have been looking at ChatGPT the last 3 to 4 months, you see now that you can ask agents, essentially digital assistants, to go at Amazon, find the best 5 best deals that can deliver to your home under 3 business days, for instance. This whole approach, this is exactly what we are starting to see in the early stage replication of within crypto. It's about the fact that you have some platforms who essentially act as your financial assistant, and it's not just about asking for information, it's about executing things on your behalf. That's what's really cool. From an own personal perspective, when we have new networks that are not extremely well known, even for someone like me who likes to really be on chain, I sometimes struggle to find how to move my money from one chain to the other. That's not going to be the case. It's not happening now, but that's not going to be the case, I would say, in a year to a year and a half from now. Because ideally, what you would have, or actually currently, you have some platforms where you can say that I want to transfer my ETH from Ethereum to Base network. I want to find the the three least risky lending pools, and I want to deposit my money until, for instance, I generate 2% ROI. And you can do all of that, like this multi-step transaction. You can do that by talking in plain English language to an agent or to a platform that has a bunch of agents. That's what's really cool. So that's what we are seeing the early innings of. But why are we talking about this now versus talking about it like a few months ago? It's because the infrastructure is actually finally being built out. We already spoke within the prediction market point about how infra like Ethereum and Solana and all of that are becoming scalable right now, but we're also seeing very unique primitives like Coinbase's something called 402, which is essentially, think of it as the new HTTP standard that allows you to pay for things like paywalls automatically without having to use your credit card. This also allows for the machine to machine economy. If you have a bunch of robots, which is again, if you've been looking at Elon Musk Robotaxi, you can see that this is a reality now, that machines can start paying each other without your authorization because they
Yeah.
already have your approval, and they don't need to wait for a settlement of 1 day or 1 to 3 days because of credit card limitations. All of this stuff is now becoming a reality. And in the traditional world, you sometimes hear about the fact that it's a black box about what these agents are doing. Well, with crypto, because of the transparency, you are actually able to see what we call verified computation, which is scrutinizing how the agent finally reached the decision that it reached. So all of these things have emerged in the last few months, and they are laying the groundwork now for the agentic economy to emerge. It's quite exciting to see how this is going to shape up in 2026, but it is really the first time that we think that we're going to move from a proof of concept to production. So a lot of there will be a lot of hallucinations, but it's exciting to see that we are actually going to be experiencing this in real time. And um, the most important thing, because again, we're talking about value investors here, how do people benefit from this? It's about the fact that again, underlying networks like Ethereum and Solana, with this new demand, this means a lot more revenue for these networks. So more demand for ETH and Sol since they are the native currency to access these things. For applications like Aave and Hyperliquid, it means more automation and more streamlined and yeah, automated finance. And then the equity tokens of some of these agents platforms, which are all at quite an early stage, but they will become more and more prominent. So this sector or this innovation, I would say, would positively impact a bunch of different layers and the value and ultimately the valuation of their native tokens as a result.
This is brilliant, Kareem. And long story short, for the audience, Kareem has been talking about robo-advisors at your fingertips to be able to transact on the blockchain, even sometimes without realizing that you're using blockchain technology. And that's incredibly exciting as we're moving into more of a agentic economy, even outside of crypto as well. Phenomenal, Kareem. Thank you for that. Any closing notes on your side?
Um, well, I'm too excited about this topic, so I'm gonna keep myself restrained and
You don't want to pull a Kareem. All right, that sounds good. Sounds good.
But
Fair
I
enough.
would say it also ties in with our stablecoin prediction. I mean, AI agents or most of the trading volume for stablecoins could be driven by agents or will be driven by AI agents, which is totally normal.
it will really make the complexities and the nuances of crypto invisible because if you're just talking to a platform and you're telling him to use four different applications with like six different primitives that crypto nerds would have to understand, but you're doing all of this like it is Revolut or like it is Western Union, and you don't really need to care about all of this, then yeah, that's exactly what will help us cross the chasm.
Yeah, for sure. And actually, right now we are at 600 million people that do have access to crypto, or hold it to some extent. This is less than 10% of the world's population that has access to the internet, which is very similar to the scale in which we were in 2003 for the internet itself, where we had only 600 million people that had access to the internet at the time. And I think that's truly exciting for the new consumer-facing applications that will be empowered by AI, but also that would help people to understand better the world with prediction markets, as you alluded to before too. Um, Moving on to the next prediction, we're going to have Darius talking about initial coin offerings. So this year we've seen a handful of crypto IPOs. I think Circle was the most successful one this year, and I think rightfully so on the back of the stablecoin standard BL called the Genius Act, as well as the fact that, quite frankly, fintech has now finally a renaissance thanks to stablecoins, as Max mentioned previously. But also, we believe that there is the IPO equivalent in crypto as well with initial coin offerings. So, Darius, tell us more about what you predict for these specific vertical as we're seeing more and more companies and startups trying to raise capital directly from community members, directly from power users, directly from even families and friends, and not just in close circles by venture capitalists.
I mean, Ilya, I think this is a very exciting prediction, both for you, me, and the rest of the team, because we also focus on venture. And before you were mentioning that Hyperliquid has no VC backing, and actually, I think that's a very good example also here. I mean, in the Hyperliquid case, it was self-funded by the team, but now we see like an additional like fundraising source for crypto ventures beyond VC, which is the community. And actually, if you look back into the history of crypto back in 2016, 17, 18, initial coin offerings, the crypto equivalent of an initial public offering, were very big. But there was a big problem with it. 90% of them were scams. And also many of them, they don't really deliver. They were not regulated. They didn't require KYC, AML. And what we're seeing since like mid 2025 is that we see like a rebirth of ICOs, but different. Different by being regulated. They require KYC, AML, know your customer, anti-money requirements by the investors. And also, they're mostly done through platforms. So in 2016, 17, 18, the project would raise directly from the community. Now we have like platforms who also vet the projects that they're not scams. And two of the most prominent ones, which you can also see here on the slide, are Echo and Legion. They're very different. Echo was just recently acquired by Coinbase for 375 million. Legion has a partnership with Kraken, and it's no advertisement, but doing a sale just today in conjunction with Kraken. And I think the exciting thing is that those fundraising platforms allow the community to also invest early before a project even launches their token. So giving them access to potentially very promising projects that before, or like the last couple of years, were just reserved for venture capitalists and like connected insiders. Now, the prediction that we have, and I think that's also like the biggest development, which we just had a month ago, is that for the first time since 2018, US retail investors have access again to such investments. And Coinbase were the first with the Mona token sale in mid of November to give US retail access again to those investments. We must say nothing changed by legislation, so there wasn't any law that changed in the US. It wasn't just Coinbase feeling very comfortable with the current US administration and the stance towards crypto, which is very positive, to do this step. And we can actually also expect Echo and Legion to do the same in the coming months. Coinbase even said to have one big sale every month. So we're going to have 12 big sales in 2026, which is also inclusive US retail investors, which brings us to our prediction that we believe that if only 10% of the amount of money that was raised back in the first ICO era, 2016-17, of 30 billion gets invested right now, we're estimating over 3 billion US dollar getting invested by the community in such projects. When we look at the investment case, who are the biggest beneficiaries, and it's actually the same with stablecoins and prediction markets, it's the underlying infrastructure. So in this case, most projects built on Solana and Ethereum. So as an investor, and again, no financial advice, if you want to have indirect access to this trend by like a lot of good, interesting meta projects, getting a lot of more fundraising or like community-aligned fundraising, Ethereum and Solana could be a potential investment that you could look at.
Super interesting, Darius. And I think right now, especially for the last, I would say 12 to 18 months, or even 2 years, we've seen, copy paste of Uniswap and Aave and then over protocols like Ethereum and Solana, but not really like strong innovations that were category defining. And I truly believe that we are in a phase in crypto right now that feels like 2003, where the iPhone moment, where the next Amazon and Google and Facebook are going to basically be coming out to create consumer-facing products that would help the world to cross the chasm in crypto and get to at least 1 billion people to access the technology. So we talked about early stage companies raising capital, but we also know that there are different type of assets also that could be tokenized or available on multiple blockchains like Ethereum and Solana. So Max already mentioned US dollars and US treasuries, but there is more than just that. And that brings us to the next and the last prediction, which is the tokenization and tokenized assets. So Darius, these are more mature assets. We talk about equities available on the blockchain 24/7. We talk about private credit. We talk about any other assets that people are used to have access to over the banks and brokerage accounts. Tell us more about the prediction for 2026 when it comes to tokenized assets.
I mean, the prediction that we have is very bold, but I feel very comfortable sharing, and I think I speak for the entire team. Currently, the total value locked, like the US dollar equivalent of assets like stocks, bonds, alternative funds, private credit, treasury bills, is estimated to be around 30 to 35 billion US dollar. We expect this to more than 10x already in 2026. So the prediction that we have is that we expect tokenized assets to surpass half a trillion in TVL. And while this seems bold, I would actually argue this is not the case. And actually, there's multiple reasons. First of all, like, what are the benefits of tokenizing traditional assets? It's 24/7 trading, like any crypto token. It's instant settlement. It's potential fractional ownership. It's way lower operational costs. And also, it's like global distribution. So just like net, it's a net positive. And that's why we also saw like this year, and also we can expect this for next year, a lot of like TradFi players, all the big players, the Goldman Sachs, JP Morgans, to tokenize equity, or the BlackRocks, which we've already seen with the Build Fund, Franklin Templeton. I think there's no big financial player who's not looking or already tokenizing assets on chain, and this will just get more and more and more. Also, on the regulatory side, we have the Clarity Act, which should go live in early 2026. It was like halted because of the government shutdown in the US, so we even have like regulatory tailwinds getting in. And maybe lastly, we have like new networks or like infrastructure that's launching. Most notably, it's Canton Network, which promises to bring like hundreds of million in tokenized assets. I believe the number currently is like around 300 million. So just
$500 billion
$500
almost.
billion, which is crazy. So if you're just looking at those trends, I think it's very realistic to make this estimate of half a trillion next year. And I think down the line, similar like JP Diamond said, I think all assets will be tokenized and on chain because it's the superior infrastructure. And in the end, it's a question of money. And if you have lower cost and broader range and all the benefits I mentioned before, assets should be tokenized. So looking at the investment case, again, currently Ethereum is the platform infrastructure of choice for institutional investors to deploy tokenized assets. We also have like Solana and Avalanche, and also Canton Network, which is launching. So all of those could be like potentially interesting if you as an investor believe that this trend will also continue, or if you agree with our view that this will more than like tenfold next year, and like most assets or all assets going to be tokenized in the coming years ahead.
And Darius, not everything is going to come at once. People like to say in crypto, slowly and then suddenly everything happens. But we know that there is a sequencing growth phase to get to that. So in terms of asset ranking, that's a question for more everybody here. But let's start with Darius first. If you had to start with an asset type that would be most likely exciting to be tokenized, which one you would get started with?
I mean, it for me would be one specifically, and actually ties to the previous prediction about ICO platforms. It's tokenized pre-IPO stocks.
Okay.
And actually, the reason why I'm saying it's linked to the previous one is because Legion actually at Breakpoint last week made the announcement that they now want to also focus actually on tokenized pre-IPO stocks, which I think is
Yep.
great because it doesn't only bring democratization of finance, which is one of the main main ethos of crypto within crypto, but also like in TradFi, because so far you need to be like very wealthy individual or institutional to have access to pre-IPO equity. And by tokenizing it and giving like access to community, again, like opens the pie for everyone. So I think it's a net positive.
Great. So apparently Elon Musk is going to have SpaceX going public, and that would be the largest IPO in the world. So let's see if that becomes tokenized as well. That would be exciting.
Maybe it tokenizes on Dogecoin. Let's see about that.
Adrian, what other assets would you be excited about to see on chain? You're on mute, by the way.
Pardon. I mean, if you ask me for excitement, stocks, just equity. I know that this might be more of a long-term vision, but the new generation, the young generation, they are not growing up with brokerage accounts or bank accounts. They have installed their wallets. They might have bought some crypto assets. And I think it's pretty evident for them to also allocate into, on-chain ETFs or, equities and stocks directly. And I think we're seeing the early innings here. For instance, on Solana with X stocks, we already have, I think, close to 150 million of tokenized stocks. And I think it's a trend that will continue over the next couple of years. And I also think, like we did with many other things, we will drop the term tokenized. I mean, for instance, when electronic trading was introduced, we called it electronic trading. Now we just call it trading because everything is electronic. Or another example would be digital cameras. I remember that time where we all had digital cameras, but now we actually talk about analog cameras. So it's the other way around, but a camera is always digital. And in the long run, maybe in like 10 years, when we talk about equities and stocks, they're de facto on chain.
I would
Yeah,
just
for
like to
sure.
add to
Like
this.
online businesses, right? Or e-commerce.
I just wanted to quickly add to what
Yeah.
Adrian said. Also, like the term real world asset. I think in the future we're just going to talk about assets. Like, what does it even mean, real world? I feel like it's confusing to a lot of people. Obviously, we want to like differentiate between the crypto native assets and like traditional assets, like we were talking about stocks, treasury bills, etc., that we're going to bring on the chain. But I think real world assets also one of the terms that we're just going to change towards assets in the long run.
Yeah, for sure. Kareem, you're next. Which assets you would love to see tokenized?
Right. I'm taking a bit of a different direction because I think it's a point we've highlighted before, but it's not getting enough recognition, even though we are seeing real adoption. It's deep and decentralized physical infrastructure. So
Wow, interesting. I like that one. Okay, tell us.
with financial assets, it's about creating a digital representation that is fully backed and collateralized and essentially a digital twin of something in the real world. But even though it addresses a lot of limitations, when you're actually talking about real world problems that are very much systemic and pretty much outside the whole developed world, Deep for me it becomes something that is really quite useful because it is tokenizing equity and tokenizing ownership of certain real world businesses. So Helium, for instance, it's the best example here, or the easiest example for everyone to understand. Helium is pretty much like a decentralized telecom provider or a decentralized broadband provider. Um, the reason why I think that this is quite powerful because AT&T they even though it should be on paper they are a competitor to AT&T. AT&T are actually working with them now. They're working with them in the US, and I can't remember. There's another region that they're working with them in because they understand that there are certain limitations where real world businesses are not going to have the incentive to build out infrastructure for. But if there are younger, emerging, and more hungry startups that are addressing this issue, well, they can work with them. And in the case in the US, I know this from someone who lives there. Helium, using their small routers that you plug into houses, if you're in an area that you have AT&T cellular coverage and then that signal is not as strong, your phone just folds back immediately to helium. And I think that this is really quite incredible because again it addresses the marginalized and under the radar
Yeah.
sort of regions, while at the same time it is actually helping to flip the script on its head by allowing people to contribute to businesses and make sure that they are sustainable, while at the same time, addressing the monopoly of which we are seeing a lot of in the capitalistic world. So I think that's a really cool thing that unfortunately the only problem why it hasn't gained enough traction yet is the attractiveness of the token. It's not as buzzy and as trendy as some of the things we've talked about, but if you look at AT&T, they have more than 1 million active users now. This is something that I think it might be more than that actually, but it's something that a lot of crypto native protocols cannot claim that they do on a consistent basis and working with outside of the stablecoin realm, not something that a lot of people can bargain for. And Deepin covers so many things. I was just giving an idea about why I feel so excited about this and why I'd love to see more of it. Because crypto, at least from my own personal philosophy, I entered crypto to address real world problems since I came from a developing economy. And to see things like that, I feel that this is really what would help others who will take crypto by its negative stigma to take it more seriously and understand that no, there is actually more benefits and more value that we just don't comprehend because it's not problems that we deal with on a daily basis.
And beyond access, there's also the economic benefits of using things like Helium, for example, where you would only pay, for example, $20 per month for a mobile subscription compared to $100 or even more via T-Mobile and over phone operators. So completely agree with you, Karim, for sure.
And it's if you think about it, actually, it's the Airbnb and Uber model 2.0. Airbnb and Uber, they allowed people to contribute resources, but they didn't actually give them enough of an incentive. That's why you hear a lot of people complain about they have a car, but they don't actually get enough compensation from Uber.
Yeah.
As in
Yeah.
the newer world, you do actually get even more fairer distribution, which I think is exactly relates to the point that you've just mentioned.
Yeah. Yeah.
Clear relationship between both parties of this equation.
Thank you, Karim. I appreciate that. That was excellent. Max, what about you? What would you like to see on chain?
Oh, Ellie, you left me for last, and now I'm forced to say something rogue or cool, but I actually am. If you go,
Stepping after Kareem, Adrian, and Darius is
exactly.
tough.
Oh,
But
shit.
anyway, all right, try.
No, I'll try. No, my uncle is an artist of physical art, and I've seen firsthand how difficult it is for him, firstly, to showcase his art. You need to rent out, galleries and have middlemen, which cost you a lot of money. But on the investment side as well, if you're an individual looking at a fine art segment for your own investment, it's a industry that is, reserved for high net worth individuals, and also it's one where it's very difficult at times to prove the origins of the artwork. And so in that regard, I think bringing something like this on chain and being able to fractionalize your investment, therefore making it a more democratic battleground, if you will, for everyday investors to actually be able to invest in that asset class. I think that's something quite exciting, but unfortunately, this is a trend that is not near yet. There have been some couple implementations over the years, particularly in the last cycle when NFTs were quite
Yeah.
a big topic. But that's something maybe way further on the tail end of implementation.
That is a rogue one. You
I,
announcing the comeback of NFTs, like that's
no,
a
I'm not
spicy one.
announcing
I
that.
love it. I love it.
Unfortunately, that's
You
not
didn't want to
something.
say the word, right?
Hey, it's not something that I
HBR.
Feels like a curse.
cursing.
Yeah.
But no, all jokes aside, I do think that in the long run, I think that's quite an exciting use case as well to prove the origins, the provenance of the artwork, and to be able to distribute that to a wider investor base for an asset class that's historically very liquid and opaque. But again, that's something that is not near, and FYI, not announcing the comeback of NFTs in this cycle, unfortunately.
Excellent. We've got a few questions, by the way, directly from the audience, and I want to be mindful of the time. So the first one from John. Thank you, John, for joining. I hope you're still on the call. How will stablecoins impact current payment networks such as Visa, MasterCard, and the others? Max, you want to go ahead?
Yeah, looks like I had the most exciting section, guys. But all,
Certainly.
all jokes aside, I think in short, stablecoins, they don't have to kill a payment platform like Visa or MasterCard, but they will, of course, change how they compete. As we mentioned, they stablecoins introduced this new settlement rail, far more efficient, cheaper, and always on. And I think if you look at the numbers as well, in most cases, uh, these volumes actually exceed major payment networks. And I believe stablecoins last year is actually only second to the automated clearinghouse in terms of volumes. So you can see that shift already happening. And so what that means is payment companies, they have a choice. They can either adapt and move up the stack, or they do risk becoming, the BlackBerries of payments, great interfaces, but they're built on outdated rails. And so I think the incumbents, those names that you mentioned, they're already seeing this, and that's why you see implementation from their side as well. You see Visa settling transactions on chain, you see MasterCard, piloting payments as well, and firms like Stripe and Western Union all embedding stablecoins in their infrastructure. So they're not actually fighting the rails, they're trying to integrate them. And so, in our view, the outcome isn't about displacement, but just about these firms evolving. And I think stablecoins doesn't remove the need for the payment networks, but it actually forces them into their next phase.
Yeah, and I think this is very similar to how in the 90s multiple businesses were starting to take the TCP/IP network of the internet very seriously so that they can solve the problem of global communication. And I truly believe that, underlying chains like Ethereum and Solana can allow us to also have these global payments as well as we see with stablecoins and the prediction, of course, that is significant for next year for Max. But I think thanks to internet protocols, we're able to have the Zoom conference as well. And I truly believe that we're going to have the same as well moving forward for payments as well. And they would just need to adapt. They would be on-chain businesses or would be the new online businesses, if you want to an analogy. I know, Alfredo, you just raised your hand. If you have a question, can you leave it directly in the Q&A section? Because I'm not sure I'm able to unmute you directly if you had to ask a question. Allowed to talk. Okay, I can allow you to talk. Cool. All right. If you want to unmute yourself, please ask a question. Otherwise, we can tackle the next question that we have in the list.
Maybe this one is for you, Eli. Let me ask the question. Do you see a reality where ETH could surpass the market cap of BTC? So he's talking about the flippening, based on the fact that with the Ethereum growth case, stablecoin boom, does BTC or could look a bit left behind if society really makes a use of ETH capabilities? Could the flippening happen?
I would say unlikely, but I wouldn't say impossible because nothing is impossible. To be politically correct, as you guys know, I'm very politically correct. But I would say very unlikely. I would give it less than 1% chance of happening, given the fact that crypto has digital gold, which is Bitcoin, and then we've got the app stores with iOS and Google Play. And I believe that for the app stores, there is a lot more competition, meaning that right now Ethereum is not on a large, comfortable seat, and that Solana is trying to take the lion's share and over networks as well, right? So it's possible on the App Store, we're going to see a duopoly or an oligopoly of multiple platforms similar to iOS and Android, or similar to Linux as well. But I truly believe that Bitcoin is on its own as digital gold. It's a very large market that is easier to sell to asset allocators compared to app platforms. Although I would say 21shares for the last 8 years have done a pretty good job at talking about analogies and trying to educate around these new primitives. So I would say unlikely, not impossible, but I wouldn't say that this could happen in 2026 for now, unless, of course, there is a massive drawdowns or a massive risk on Bitcoin or any other assets like quantum computing, but not happening next year.
Maybe let me also add on this. I'm a big Ethereum fan, but I'm trying to be
I
very
knew he's gonna speak.
neutral. So I'm going to be very neutral on this. I agree with what Ali said. I mean, nothing is impossible, so it's not like zero possibility. It's very unlikely, especially for if you're just talking for 1 year horizon. Not going to happen. Actually, I'll make a prediction which might maybe surprise my colleagues here on the call. I think it's rather Bitcoin having a Bitcoin fork or maybe doing an update like OPCat and having smart contract capabilities than Ethereum surpassing Bitcoin in market cap. Because as Ali said, Bitcoin within like the digital gold store of wealth narrative is by itself. It has a monopoly. There's no competition. Like all the Bitcoin gold, SVs, and so far, they're irrelevant now. They used to be relevant 2 cycles ago, so not even in the last one. If you look at Ethereum, we have the Solanas, the Avalanche, like a Plantora. We have the bases. There's a big question. L2s are the parasitic. And since like most activity is happening now on the layer 2 and not on the L1, we won't have like enough transactions on Ethereum that like the supply became deflationary and ETH potentially being able to compete with Bitcoin on, let's say, on the store of value or scarcity narrative. So my very bold prediction is that the likelihood is way bigger to see smart contract or like sophisticated smart contract capabilities on Bitcoin by either a Bitcoin fork or by Bitcoin itself upgrading to OPCat than Ethereum surpassing Ethereum.
I would just
Ethereum surpassing Bitcoin. Actually, I'm afraid now going to a Ethereum conference next year by saying this, but I think really this is what I believe.
Good luck. That's
I'm going to send you, Ali. I'm not going
that's
to
not
go.
off the record, you know.
I'm going to the Solana conference.
That's on the record with your face on the call. I want to be mindful of the time. We're already at time. But we really appreciate your time, guys. Max, Darius, Adrian, Karim. That was phenomenal. For the audience right now, if you're curious about checking out our research, let me share quickly the QR code so that you can see it. You can scan for the next few seconds to check out the magazines available on our website, free of charge, of course, written by our very own researchers on the call today. There's only one that is missing, but we give him a really good kudos and shout out, which is Matt, based in New York. Matt is out of office, but it's been phenomenal, guys. 2026 sounds exciting. And of course, at 21 Shares, we want to keep pushing the boundaries of research and innovation. So stay tuned for the recap of 2025 that we're going to publish in the coming days and week, so that you guys can see how exciting it has been for crypto this year, planting the seeds for 2026. Guys, that was great.
Happy holidays, everybody.
Happy
Happy
holidays.
holidays.
Merry Christmas and Happy New Year in
Happy
advance.
holidays.
Thank you, guys. Speak
Thank
soon.
you.
Ciao, ciao.
Thank you.